Hello, my name is Andreas and today we'll talk about swap rates. But before we do, we must first consider interest rates. Each currency has an interest rate connected to it. Since each forex pair involves two different currencies, it also involves two different interest rates, one for each currency. When trading in the forex market, very often traders leave their trading positions open overnight. These positions are carried forward automatically the next day, and that is when the interest rate is charged. Now, the amount charged is simply the difference between the interest rate of the currency you're buying minus the interest rate of the currency you're selling. This is what we call swaps or rollover fees. It is the overnight fee charged for rolling over, or in other words, the fee you pay to keep your position open heading into the next day. Head on to our next video for a more detailed explanation. Thanks for watching.